Dividend growth stocks offer the best of both worlds for investors who want dividends but also want to prioritize growth and want to see assets that can outperform benchmarks like the S&P 500. These stocks typically don't have high yields, and you're lucky to see a dividend growth stock, a true dividend growth stock that has a dividend yield above 2%. So while you're not going to see that on this list, you are going to see stocks that have a history of outperforming the market. So we're going to go into the first dividend growth stock on this list, which is Broadcom. The company recently reported 43% year-over-year revenue growth in the second quarter of fiscal 2024, and that is a 12% year-over-year revenue growth if we exclude the VMware acquisition, which has been working very well for the software side of Broadcom's business. The AI side is also booming. AI product sales reached a record 3.1 billion, and the artificial intelligence industry is projected to maintain a compounded annual growth rate of 36.6% year over year from now until 2030. That comes from Grand View Research. So with Broadcom expanding in the AI industry, and with that industry still having plenty of years of high growth numbers left, it stands to reason that Broadcom can continue to outperform the market. Now, NVIDIA is the clear number one when it comes to AI chips, but Broadcom's potential OpenAI partnership can lead to more demand for its products in the AI industry. And if Broadcom is able to comfortably seal the number two spot, then it stands to have a good tailwind moving forward. The company does feel optimistic about its AI initiatives and its other offerings based on the raised fiscal 2024 revenue guidance. Broadcom now anticipates generating $51 billion in revenue during that quarter. The stock comes with a yield of roughly 1.27%, and the company raised their dividend by 14.1% year over year, moving their quarterly dividend from $4.60 per share to $5.25 per share. This is on a pre-split basis. So with the rising dividend and the AI tailwinds, Broadcom has a good shot at continuing to outperform the stock market and rewarding patient dividend growth investors. The second dividend growth stock on this list is Visa. Now, it has a slow start year to date compared to some of the other stocks that you could get, but it is the leading credit and debit card issuer. It's going to make some revenue from each credit and debit card transaction, and the company regularly has high profit margins that exceed 50%, allowing it to invest billions of dollars each quarter into stock buybacks and dividends. The company allocated $5.8 billion this quarter towards those two initiatives, and Visa last year raised its dividend by 15.6% year over year. The quarterly dividend per share went up from 45 cents to 52 cents per share, and Visa is going to raise their dividend later this year. They've issued 4 dividends at 52 cents per share, so it's only a matter of time before they announce a new dividend hike, which should also likely have a double-digit year-over-year growth rate. Now, Q3 fiscal 2024 earnings results were pretty good. Revenue for the company increased by 10% year over year, reaching $8.9 billion in the process. Net income was at $4.9 billion, again, demonstrating those high profit margins, and net income was up by 17% year over year. A big growth driver for the company was cross-border volume. That metric was up by 14% year over year. Those impressive financials suggest that Visa can continue to support a high dividend growth rate and pour more money into stock buybacks each quarter. Our final company on this list is Intuit. It is the fintech company that owns TurboTax, QuickBooks, Credit Karma, and MailChimp. So there's a lot of recurring revenue, and there are a lot of products that many consumers rely on each year. The company grew its revenue by 12% year over year in the third quarter of fiscal 2024. Total revenue reached $6.7 billion, while net income was up by 14% year over year and reached $2.4 billion, resulting in a 35% net profit margin. So Intuit, it's able to grow its top line and it's able to retain a lot of its earnings, which helps a lot for stock buybacks and the dividend. While the yield is only at 0.55%, The company did hike its dividend by 15.4% year over year, bringing the quarterly dividend from 78 cents per share to 90 cents per share. Now, looking deeper at Q3 fiscal 2024, we see several categories that are up year over year. So there wasn't really a laggard this time around. Credit Karma notably being up 8% year over year to reach 443 million in revenue. Credit Karma had been down year over year for several quarters, so it's nice to see that Credit Karma is now a positive contributor for year over year revenue growth. The small business and self-employed group is the biggest growth component that was up by 18% year over year and came to 2.4 billion. The company's successes in that quarter prompted leadership to raise full year guidance. So now we're expecting 13% year over year revenue growth throughout fiscal 2024 in comparison to the 11% to 12% year over year range that we were given earlier. GAAP EPS was also a big winner in the guidance revision. That's now expected to grow at 28% to 29% year over year, instead of the 11% to 15% year over year guidance from earlier. The small business and self-employed group is also expected to be a big leader, making up more than half of total revenue and growing at 18% year over year. Intuit has several top-tier brands under its corporate umbrella, and it looks to continue to dominate the fintech industry. Those are the 3 top dividend stocks in this video. Make sure you subscribe for more, and I look forward to seeing you in the next one.